Thank you. Okay, hey, so, thank you. Woo! All right, hey, so, the news has been pretty, not the greatest in the last couple of months here with tariffs. The economy is sort of, in the dumpster. A lot of negative press has been happening lately, and in this video, I want to talk about some wealth creating strategies and tips and information. And most of it's going to be real estate related, and we're going to talk about stocks and whatnot. And hopefully by the end of this video, at least you'll have maybe a mental process on maybe bettering your financial health. So if you want to stick around and learn a couple things about this, stay tuned. So before we continue, if you can do me a quick favor, if you can like, subscribe, share, and leave a comment, smash that like button. I'd be very grateful. It helps the channel grow. I love comments. Comments, help the channel, create engagement, and it's been helping the channel move along and grow. And I'd be very grateful. Don't forget, I am doing this for real estate business. I have a passion for real estate. And, if you have any questions about, real estate, investing, buying, selling, here's my contact information. You can call me, text me. You can leave me a mess. You could leave me an email. You could send me a carrier pigeon, whatever your preferred method of communication is. Let's get together. Let's meet on Zoom if you're from out of town. Let's meet for coffee and talk about your real estate needs. Okay, so let's dive into it. But before we do, I have to, a little caveat first. Before, I'm not a financial advisor, and I'm not a fiduciary investment advisor or anything of that. I'm not licensed in that capacity. I'm a realtor. I can help you with investing in real estate. I can help you with selling your house. I can help you with investing in real estate. But in terms of investing in anything else like stocks or mutual funds or ETFs and all that, I'm not licensed in that. But what I have is I have a lot of knowledge in this because I do all that myself outside of real estate to grow my own wealth. And I've had some success. Actually, I've had a lot of success in that. So I want to share some of that because I think right now folks need something positive and something that's useful and that could start getting them off the topic of bad financial news and more in the direction of something that's better. But I want to advocate that you do more research. You read some books. You look into you look into these investments with with a real scrutiny. Really check these things out. Talk to professionals that know what they're talking about. I mean, don't talk to your friends unless they actually had a lot of success in a lot of this stuff. Because I think when a lot of people talk to their friends and all that, they get bad advice, and I've seen quite a lot of that. But talk to real people that are experts in this area. Okay, so. All right, investments. So, I'm going to talk about a little bit. I'm going to talk just a hair about some of the successes I've had, and I'm going to talk about some of the failures I've had because, we learn from failures. We learn from our mistakes. But I have a, I wouldn't say a buddy, but I've learned from him. He's almost a billionaire, and I go to his seminars and stuff, and and he's got probably the most credible results out of all the furus and gurus are out there. There's all kinds of shysters out there that are taking your money and they're offering. They're giving some good advice, but the fact is they're trying to sell you courses and training and all this, and there's a lot of them, and it's a lot of crap, a lot of it. I'm not going to say any names and all that, but you can probably guess who they might be. And And yeah, you might be skeptical about myself in here. Well, listen, here's the thing. I'm not going to ask you for any money for any training or courses or anything. I hope that we can sit down and talk about real estate. And if you want to work with me, we can talk more. But I'm certainly not going to ask for any money from you or anything. But let's talk about some of the successes I've had over the years. I've actually been very successful in the stock market. I actually took I've read. I've had some failures in the beginning. Let's talk about my early trading. I read a couple books, and it was very early. It was more than 30 years ago, and they were probably good books. I should probably read them again because I probably understand them better now than I did then. But I got some ideas. I tried. I failed. I lost. I think the first trade I did was a mining stock. I bought it for a price, and then I sold it for the same price that I bought it for. I mean, it was a nice exercise. And back then, by the way, we didn't have the online trading like we do. For zero trade, you could trade for zero dollars or $10 a trade or $1 a trade. We didn't have that. Back then, we had to pick up the phone, call our stockbroker, who charged anywhere from $75 to $160 a trade. So you better have a lot of money. I mean, you couldn't do a trade for less than $5,000 because it wasn't worth it. You had to do two. Let's say if you paid $150 a trade back then, you had to make sure that you had to make $320 profit and then make profit beyond that. Do you know what I mean? So nowadays, I use Questrade and I use TD Bank. TD Waterhouse is $10 a trade. So yeah, you could easily just trade at $500 to $1,000, and you're good to go. And Questrade's even better. I mean, you pay a monthly fee, but boy, I tell you, zero trades, or $0 for trade, or $1 a trade, or $1.40. That's peanuts. So we've had it better. We got it a lot better these days. So I adopted a strategy, and there's a couple strategies that I do. The best strategy and the most foolproof strategy I've ever worked so far. I mean, anything could happen, but thus far, I have made money 100% of the time using this strategy. And the strategy is buying companies that are, well, for one thing, most of them are Canadian. Some of them are American, but if you buy Canadian companies, you get a tax break. You also, when you buy banks, and if you're gonna learn anything today, buy banks. Banks are, if you're gonna walk away with one thing today, this is it. Buy banks. Banks are so rock solid. They pay incredible dividends. They pay dividends that grow every year. They're indexed, and they go up in value. Right now is such a great opportunity to buy because this is the time we buy. I mean, let's face it. We have a great opportunity right now. Our friend Premier Trump is creating a fantastic opportunity to buy stocks for a great price. Things are down 10, 15, 18%. We're not quite in a stock crash, but we're getting there. I mean, yesterday the stock market went up a historic amount. I believe the Dow went up 3,000 points. Wow. But it's down today 800, which is a lot. And I'm thinking we're going to see a lot more declines. So pay attention because there's going to be some good deals. So I bought companies like banks, insurance companies, utility companies that are recession proof. An airline company would be a good example of a company that's not recession proof. A travel company wouldn't be recession proof, but food providers, grocery chains, utility companies. I mean, there's a stock that I hold It's called Algonquin Utilities right now. There's here, hold on. Do I have my phone with me? Darn, no, my phone's up there. Um, there's another utility, Enbridge, another great utility company, down a little bit right now, but they're investing in a lot of green uh, options to heat homes and create green electricity. They pay a hell of a dividend, and it increases every year. I don't have any Enbridge. I have Algonquin. Algonquin's really cheap right now, and they're really into the windmills and solar and stuff. They're really they've been kind of leading the charge on that. They pay a dividend, and they're cheap right now. And I mean, don't rush out and buy this stock because I really encourage you to do some more research before you run out. But I'm just using these as examples of I've owned Algonquin for 12 years now. It's been up and down, and it's been down a lot lately. But so is everything. I also own a lot of Canadian banks. CIBC. I own TD Bank, Scotia Bank. TD and Scotia I happen to deal with, so it's good to own what you deal with. I also have Sun Life Financial. I have a big chunk of my retirement portfolio in Sun Life Financial, and I own the stock. I own quite a lot of it, and it pays a beautiful dividend. And another company, if you want to get into real estate, I got to put a real estate spin on this. Is a nice company that you might want to consider investing if you want to jump in the real estate market and don't want to actually buy property. Consider a real estate fund like RioCan. RioCan is a Canadian company, and they're about $16.30 a share right now. So that's a good price. I've been buying at 18, 17, 19. I will be buying more of RioCan. I will continue buying RioCan until I get about 5,000 shares. 5,000 shares will pay approximately $500 a month dividend. So I'll have a $500 dividend for owning RioCan. And that's some pretty decent money coming in. Plus, it's going up in value. So these are options that, do your research. I'm just giving you ideas. This is stuff that has worked for me. I've owned all these stocks. Some of them I've owned for 15, 20 years, and they've been paying, and going up and up and up and up. And right now they're going down, 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 down. For how much longer, I don't know, but I'm going to keep buying them because I have a thing that when the dividends come in, they actually reinvest in more dividends. So they're buying more stock. Whenever I get some extra money, I buy more stocks. Whenever I have extra money left over. Well, these days it's a little bit tough because real estate is very slow right now. Business is a little slow the last few months, but that's going to turn around. But I just tell you, hi, people from my office. But I'm just giving you suggestions because this is a great opportunity, and I hope that you might consider taking advantage of an opportunity it's before you right now. And I know it's tough. I get it. If your job's in jeopardy because of all this uncertainty, it's tricky. And going out and borrowing money, actually, I'm actually going to be borrowing some money to buy more stock. But I can do that. I can, I'm pretty confident in my ability to buy what I buy because I know it's going to pay. Even in fact, the dividends will actually pay the interest of the stocks that I buy. So that's just a suggestion, but that's what I'm doing. Should you be doing it? Well, that's all depends on your situation. If you're comfortable with that kind of strategy, borrowing money to take advantage of this, yeah, by all means, that's what I'm doing. And I think that it's probably a good plan. But again, only if you're comfortable, only if you really, really thoroughly researched the strategy, the stock, and you also risk managed the scenarios. imagine this. Think about what's the worst thing, what's the best thing that can happen, what's the worst thing that can happen, what's the most likely thing to happen. Then make your decision after you've done all your research. So, I mean, these are things that have worked for me over the years, and as a result, I'm having a fair amount. I don't know, I'm trying to be modest, but I actually had a great deal of success with this strategy. And I mean, if you got questions, by all means, put it in the comments and ask me, about this stuff. I've been wrong too from time to time. Sometimes because I'm pretty stuck on this strategy. Some people ask me, "Oh, should I buy Netflix? Should I buy this company? Should I buy that company?" And I also, well, it doesn't really fit into my strategy purview. And I would say no. And the next thing you know, Netflix goes up 3 times, and I just told somebody not to buy it. That's happened. But that's a different strategy. That's swing trading. I also watch stocks, and I wait for opportunities like this one right now. How we're in a bear market right now. So I'm keeping very close eye on big companies, and I'm waiting for an opportunity to buy a bunch of them and unload them. And I look for maybe about a 10-15% profit or more. I'm hoping for a big payout because I'm going to be borrowing money to do this. I don't recommend that, guys. You got to be very expert in trading like that because you can lose a ton of money. Now there's a one thing you can do is you could put a stop on your on the trade. So let's say if you buy Google let's say Google right now is 157. So let's say you waited for it to drop down to 158. You bought in at 150, and which is a good price. And then you say, well, I'm gonna put a stop on it. So if it drops at 140, the stock is going to automatically sell. So that way you don't lose your shirt. That's a good thing to do. The danger with that is it could drop to 140 and then spring back up, and then you lost your opportunity. That's happened to me more times than I can count. But if you're not sure about a company, there have been times where I'm glad I did that because the stop sells the stock, and then it would stay low for a long time. So then I'm glad I sold it because the stock did eventually turn around, but I've had money tied up in a low stock. So that's a tough one. And this is why this strategy is not the one I recommend you start with. I recommend that you start with the strategy of buying good companies that pay really good dividends. You wait for a great opportunity, like now. That's a good time to buy, and you load up on some of these companies like banks and maybe RioCan and Amazon. Well, Amazon doesn't pay a dividend, but it's a company that's got a very strong balance sheet. I don't really like some of their business practices. The employees there work get paid very minimum, and they work quite hard, I'm told. But I don't know. Maybe that's a lot of just negative press about the company, just because I don't know. I mean, I have some morality in my purchasing of companies. I try to stay away from companies that have bad business practices, where they exploit workers or they just exploit situations in a bad way and stuff. I'm not going to go into some of the companies that I would rather not deal with. There are quite a lot of them, and a lot of them do sort of have bad practices, in my opinion. But, banks, you can't really go wrong. I mean, it's money. Money. We all need money. You can't go. You can't. We can't live without money, and maybe, and yes, they do have some of the system rigged to some degree because, I mean, when you think about it, if there's only if there's $1 million in the bank and they can lend 10 times or 100 times much in the bank, and they're just kind of what are they lending? They're lending you nothing. It's just a radio. It's just a radio frequency. All of a sudden, boom, they typed in a few numbers, and boom, you get 500,000 deposited into your bank account, and that's nothing. That's just air. There's no tangible. It's not a concrete product, but and they're charging interest on top of that, and they can do that millions of times over with nothing. That's kind of weird, but it's a foolproof business model, and hey, I've profited on it, and maybe you should think about profiting too. Okay, so let's. I am a real estate agent here, so let's talk about real estate and investing. So yeah, what can I say? I mean, let's talk about some of my my failures in real estate because I think this guy, I think I mentioned him, JT Fox. I've been learning from him over the last couple of years, and he's close to being a billionaire. And he's, like I say, he's one of the better guys on the internet. That he actually has some pretty good substance. Take some of the stuff he says with a grain of salt too. Some of the stuff is I mean, you might want to just take some of it with a grain of salt. You do your research and stuff, but a lot of the stuff has been pretty useful. But what he says about one thing he said to me, or he said to the whole group, was a genius, a smart person learns from their mistakes, but a genius learns from someone else's mistakes. So I'm going to talk about some of my mistakes in buying real estate. My first property investment, I bought a fourplex years ago in Hamilton. And, firstly, I bought it, it was a for sale by owner. So that was my first mistake. It was a for sale by owner. I didn't know what I was doing. And I paid too much for the property. Not much. I mean, back then, real estate, I paid $210,000. That was 20 years ago. And, I really should have paid maybe $180, $190. That's what it was really worth. But I paid too much. Maybe $190. Let's say $190. Make me feel better, that I didn't pay too much. So I paid a little too much for it. I put down, I only had 5%. So I had 5% down for this property. That was another mistake. Mistake number 2. Mistake number 3 was I had a useless business partner. This is how much money he put in. So he was just kind of along for the ride. Mistake number 4 was we incorporated we incorporated our company. Now, a lot of the gurus and gurus are going to tell you all the advantages of incorporating when you're investing in real estate. But here's the thing: you're going to pay a fortune in accounting fees, and you're also going to pay a fortune to incorporate. But I got sold by these gurus, to register 4 companies, including a Nevada corporation. And that thing cost me a bloody fortune. And I was paying a fortune every year for accounting fees for a company that wasn't making any money. So that was mistake number 4. You can put it in your name. Now there is some risk. There is some risk, but all my friends that invest in real estate, some of them have corporations, some of them don't, and the risk is very low that you're going to have some liability. I mean, it can happen. I mean, again, this is something that this is my opinion. Definitely do your research, and if you can manage registering a corporation and spending $8,000-9,000 a year in accounting fees, then by all means, I mean, you probably should incorporate. But my feeling is when you have about 5 or 6 companies, you should or properties, you should probably have them under a corporation. But if you just have one or two properties, and a lot of a lot of investors will say, for the beginnings, hold off on the corp on getting a corp. So I did all that, and it cost me a fortune. I lost a ton of money on accounting fees and all that. And I have a property right now that I don't have. That's under my name, my wife's name. We've never had problems. We've got good insurance. That's the thing. As long as you got good insurance, you're probably going to be okay. So I've got good insurance. It's a bit, maybe $30 a month more, but that certainly beats paying $5,000 or $10,000 a month or a year in accounting. And there's other fees along with having a corporation as well. But anyway, we'll get into that. So that was mistake number 4. I didn't have enough capital to begin with, and I had a pretty useless partner, and again paid nothing. Did help out a little bit. I mean, he was a nice guy and everything, but the other thing too was he had horrible credit. His credit was horrible. My credit was better. I had no job at the time. I was underemployed, and I had this property that I couldn't afford. See, what happens is this is the thing. Real estate could be a great investment, and it is. But if you bought a property for $1 million and you're putting and you only put 5% down, and you're going to be at the end of every month, you're going to be cash negative $1,500 or more a month. It's not a good investment. If you're comfortable with putting your own money in every month, because eventually it is going to make you money, but it could be a long road before that property starts making you money. So you got to really know your numbers. I mean, really know your numbers. If you want to see a really good analysis on the numbers in terms of investing in a real estate property, I will provide one for you at your request. I don't have one right now, but basically the expenses of a property and minus the actual income, and I can give you something that'll give you a basic idea. But there's a lot more that goes into that. Of course, the easiest way to invest in real estate, there's a couple. I mean, you can create a little syndicate where you and maybe 4 other buddies, throw in maybe 20 to 50,000 each, and you all buy a property together. That has a lot of problems in and itself. It could be very complicated. You have 5 different personalities, all having different agendas. But these things can work if they're done properly. And how you would do it properly is everybody knows the arrangement right up front, that the property is held for a certain length of time. That once the investment is underway, you can't sell it until you've reached a certain amount of money. Everybody has to agree on stuff, and everything has to be done in writing. It has to be done with a lawyer too. So you spend about $1,000 for a lawyer to draft a good contract up, and everybody understands that's the arrangement with the investment. The other thing is like I say, I mentioned here, invest in a real estate fund like RioCan. RioCan's the biggest, and it happens to be it's well established and it pays a dividend, and I happen to invest in it. So I'm not making it. They're not paying me any other than what I have invested. They're not making any. I'm not making any money from them for me to suggest that. I just use that as an example. But that's just and I understand Scott McGillivray has a fund now. I get the emails from Scott McGillivray all the time about his real estate fund, and it looks okay. Again, though, I mean, I'm sure. At the moment, it's probably seeing some tough times right now, but I don't know for sure. You can always look into his fund, and I mean, there's a bunch of them, but by all means, do your research. Check out these funds and look at some of their track record and see how they, because the salespeople are gonna spin all sorts of exaggerated truths. Oh, we've never had our fund has never lost any money in 20 years, and but do your research, use Google and thoroughly check out these funds. Don't just take my word or Scott McGilvery's or the sales reps or anybody. But definitely, use your you definitely do your research. Wow, that's a lot today. I mean, I'm very passionate about this, and no matter where you are in your life, things could be really trying right now, and I get it. I mean, business is slow. A lot of people might be unemployed. I don't know. Maybe you're in. Maybe you might even be in a real bad spot, tight spot. Just try to stay positive. Try to not watch too much of the negative publicity. Try to feed your mind with good information, and take action. I mean, if you need to find a better job or work more hours, or get a better paying job, or whatever it is that you need to do, figure it out. Ask people that know. Try to get good advice from actual people who have succeeded. I mean, I know your friends might mean well, and in a lot of cases they might, but in a lot of cases that sometimes they're just because they failed in something, they will give you their advice. Well, I failed in this, just because I failed, you'll fail as well. I mean, that's not true, guys. Don't really take advice from friends with a grain of salt, because maybe they mean well, or maybe they're just or they'll just plain tell you, oh, this doesn't work, and they want to spare you from the pain of failure, or they just want to make themselves feel better. I mean, try to hang out with people that are not negative and have more success. Try to elevate your social circles with people that are succeeding in things. And whatever situation that you're in right now, however bad, it's not going to be forever. This isn't going to be this whole trade nonsense isn't going to be around forever. We're going to get past all this. We're going to have better economic times, and there are opportunities. They're out there, and I hope for, if anything, you got something out of this, and I hope that we can connect on my with the comments, or you can contact me anytime. Let's talk, and I'll try to share more in-depth knowledge with you, because I failed, and I've learned from my failures, and I also had a lot of successes, and I'd love to just meet for coffee, and we can talk about, it doesn't have to be real estate even. I mean, eventually, I would encourage you to invest in real estate, but we can always meet, even if you're a year away from buying property, or you just want to talk about investing in general. I'd love to just hang out, and we can I can be that better person that you can talk to. All right, so call me. Here's my info, and don't forget, please subscribe, share if you haven't, subscribe if you haven't already, share the video, and again, leave comments. And here everything is. Don't forget, every Thursday at 5 o'clock. Today's Thursday, actually, so I'm going to be rushing to edit this long video. And every Thursday at 5 o'clock, I put out a new video, and Saturday at 7 a.m., yet another video. Okay, that's it. And thank you, everyone. We'll see you Saturday. Have a great day. Have a great evening, and let's talk. Bye for now. Woo!